Hi, Richard Hemming here, reporting from Planet Earth and Under the Radar report. Well, SpaceX floats tonight on the NASDAQ. The Elon Musk moonshot might actually go to the moon, or it might not. So either way, it's going to be explosive. And what you need here back on planet Earth, well, in space too for that matter, is something to live on. So one place we are seeing that life-sustaining force, or income, if you will, untouched by the recent budget, is the humble dividend. The tax advantages of dividends for Australian investors are here to stay. In small caps, they also provide evidence of profitability, and we have profited from them. Make no mistake. What we are also seeing right now is the gold price come under sustained pressure as higher interest rates become a feature. So what we saw this week, as you probably know, is inflation in the US jumped to 4.2% in May. That is the highest level in 3 years. Conflict in the Middle East is driving up energy prices and driving down the gold price, because gold does not produce income. It's not an income producing asset. So US $4,100 an ounce. It's down something like 30% on its record reached in late January. The thing is, gold stocks which are leveraged to the gold price are down on average even more. Like a 10% move in the gold price, sort of all things being equal, has a 30% valuation impact on a gold producer. So those that have watched me in the past, those who have followed Under the Radar, know that my favorites long-term have been Northern Star Resources and Evolution Mining. Like, these have been two high-performing gold stocks over a long number of years since I first picked them, back in early 2012, 2013. Both are now trading at multi-month lows. Like, Northern Star has been hit harder than most because of production shortfalls. So that stock's under the pump even more. But these provide opportunities. So whatever the gold price does, select Australian producers are in the box seat. Why are they in the box seat? Because their costs of production are relatively low, especially when their costs are in Australian dollars. So our recent gold report, I urge you to read it, runs through our favored low-cost producers and how they're making more money than ever. So growth is always the big question in investing. Like, that's what we talk about a lot, especially in the small cap world. But many of these gains will actually be in the form of dividends and buybacks. A good example in recent years has been Regis Resources, ticker RRL. So this turned itself into a cash cow, basically resulting in a recent resumption of dividends and buybacks. I mean, after doing nothing for a number of years, having a dud mine, the stock has exploded. Like, it's exploded from mid-2024, probably when sentiment was at its lowest, when it got it got rejected in its New South Wales mine. That has returned 47% a year over the past 3 years. So that's even after recent weakness, which has seen the share price almost halve in recent months. So this is the power of cash flow. This is the power of companies turning on capital initiatives like buybacks, like dividends. This is the power of gold production. So I recommend you check out our gold report to see which ones might fit into your portfolio. I am talking about dividend yields of 4% plus, which when you add on franking credits is much more. So you don't have to wait long to get the cash return, whereas nobody on planet Earth, at least nobody that I'm aware of, thinks SpaceX will pay a dividend anytime soon, if ever. I'm Richard Hemming, Under the Radar report. Stay tuned here on planet Earth.